to our very first litigation finance deal that we have ever brought to the Altea community. I'm joined today by Nick Kellermeyer and Chris Czaplak from Homefront Group. Now, Homefront Group is raising $1.5 million to fund a litigation financing portfolio that is designed specifically, in this case, for veterans and first responders. The capital is going to be used to acquire mass tort cases, and we'll get into kind of how those work and what they're all about, and also to fund VA veterans disability appeals, which we'll get into as well. There is a lot of interest in this deal. This is one of the highest amount of interest deals that we've ever run through Altea, and so there's a fair amount of questions that people have as well. So that's why we're hosting this Q&A session for you. If you have questions, feel free to ask them live or just pop them in the chat. And we have some questions that folks have asked offline, which we'll get to as well. But yeah, that's pretty much it from my side. So Nick and Chris, welcome.
Thank you. Thank you.
So maybe if you could start by telling us your story. You guys have really interesting backgrounds, and would love to know kind of how Homefront got started. And yeah, tell us a little bit about your firm and how you operate.
Great, Chris, I'll start on this, and then I'll tee you up. So I'm Nick Kellermeyer, background as an entrepreneur. I'm not the attorney nor the military veteran in the duo. But I bring more the sales and marketing side of things. Many years ago, I was very early with Grubhub. I was the 5th employee and the head of sales there, and helped the business go from under $1 million in revenue to over 170 million. So I know how to scale a startup. After Grubhub, I co-owned a paid social ad agency, working with a lot of top D2C e-com brands, brands like Fabletics, Home Chef, HelloFresh, and Brooklinen. My business partner in that venture, he and I built it up over 6 or 7 years and sold it. And then I was sitting in the company that acquired us, trying to figure out what was next, and just started testing a lot of ideas. One thing that caught my attention was litigation finance. And so I went down this path of trying to figure out litigation finance. And while I did that, I started building up some content sites in the legal space, and also networking with people on LinkedIn. One thing led to another. I met one person that introduced me to Chris. We're both here in San Diego. We both spent time in Chicago. We had coffee at a coffee shop here in San Diego, and hit it off, and started talking about the Camp Lejeune mass tort. And I was like, hey, I can generate some leads for you. You're a former Navy JAG. Let's try something. So that's where it started, and then I'll pass it over to Chris.
Thanks, Nick. Yeah, I'm Chris. I'm the lawyer of the pair. Usually that means I'm the guy telling people they can't have fun, but working with Nick has been a blast, and really excited to share what we've done so far and what we plan to do next. I started off my professional life joining the Navy at 18. I grew up in Chicago, had never really left Chicago, and so kind of this kind of cliched story of I wanted to join the Navy and see the world. Ended up going to the U.S. Naval Academy in Annapolis, Maryland, graduated and went into the submarine force. So I didn't initially start in law, but was on a nuclear submarine out of Pearl Harbor for about 3 years after I'd completed my training. That was a great experience, but I didn't want to stay on a submarine. So I was able to get a desk job at the Pentagon and start thinking of looking for other ways to stay in the Navy, but doing something different. There was an opportunity to go to law school on active duty that came up, and the stars aligned. I got selected, and so I went to law school in DC, finished that, graduated, passed the bar, and then spent the next 10, 12 years doing mostly criminal law on active duty. So if you've seen the movie A Few Good Men, Tom Cruise is a slightly less attractive version of me. You know, that's more or less what my job does. Yeah. Well, I did, you know, he has more hair, but I'm frankly better in the courtroom. No, but that was so the military, if you're not familiar with it, has its own court system, and you know, it's strictly, you know, prosecution and criminal defense, and we kind of handle all the crimes and misdeeds of service members ourselves. So I spent most of my time doing criminal defense. And what I found was I had this deep affinity for uh, these service members that I was defending. Not necessarily, I mean, there were some horrendous things that they did, and, you know, obviously, but those were generally the exceptions. A lot of times it was individuals who, you know, they just made a bad decision. They had a very redemptive story, and so I drew a lot of professional satisfaction from trying to stand up for them and defend them in this system and make sure that you know, their rights were represented, and that they weren't, you know, that they weren't being held accountable for something that they didn't do, or not to the degree that they did it. And that's where I think that is where I really developed this, you know, sense of helping veterans. You know, there were some ancillary things. Even when I was a prosecutor and I was working with victims, it was sort of the same kind of, almost sort of like the same sensation of like, here's someone who's been wronged. Here's someone who has to now navigate this almost impenetrable system to get benefits that exist, but no one knows how to do it. And so that, you know, helping veterans on both sides of those cases, or active service members on both sides of those cases, became one of the major professional satisfactions I had as a JAG. But all good things come to an end. I was approaching the point where I was eligible to retire from the military. And I was going to be young enough that I was going to have a time for a second career. I wanted to try something wildly different. I had the GI Bill benefit. I did my own VA disability claim to help, you know, tap into some of those benefits. So I have a very personal story related to what we're trying to do. Wow. And, you know, got my MBA, fell in love with entrepreneurship, started to build my own business law practice. And that's when Nick and I and our network sort of intersected. We both, when in this meeting at the coffee shop that you referenced, we both had this sort of same desire to do something entrepreneurial that had some level of a social good. And at the time, the Camp Lejeune contaminated water case was going on. I'll get into that in a little bit more detail next, but there were a lot of really, I would say, unethical practices that were going on, and there was certainly some predatory practices throughout the entire value chain of that case. And, you know, there was something that was really at the forefront of Nick's mind and mine, and we thought, well, between the two of us, we could do something better, and that's where Homefront was born. I'll pause for a second. Nick, if I left out anything out, you know.
Yeah, no, I think it's good. Like the good background story, and the natural segue would be into the Camp Lejeune case study or our experience with that, but happy to go whatever direction you guys want to go.
I agree. I mean, I think like you're perfectly suited for what you're doing now, which is always really cool to see. Coming from the Marines, I mean, you are a vet, and you guys hire vets, and I think that's one of the differences between you guys and other firms. I'd love to talk about that. One of the lines in the deal memo, which really stuck out at me, was this idea of like vets trust vets, right? So maybe tell us about that. Tell us like, how you get deal flow, and how, before we get to the Camp Lejeune, or maybe using that as an example, like how you leverage the trust within the military community to create these litigation leads.
Yeah, I'll start with this, Chris, and then you can chime in. So in the legal world, they call it case origination. but for a lot of other businesses and marketers, you call it client acquisition, lead or demand generation. So the opportunity, so the landscape was when the kind of like the assumptions that we had was we've got this mass tort case of Camp Lejeune. Law firms have spent hundreds of millions of dollars in the U.S. promoting this case. If you watch any television in the U.S. for a while, that's all you saw, especially on news channels, was Camp Lejeune water contamination. Do you qualify? However, there were, I think, of the total amount of potential claimants, less than 10% had filed a claim at the point that Chris and I had met. And so there was hundreds of millions of dollars spent advertising and promoting this, yet less than 10% had filed a claim. It's like, why is that? And so the assumption that we had was either there's confusion or there's a high level of distrust or people are charging too much or people are scared of getting, cheated. And so Chris and I looked at this and said, okay, what do you think the problem is? We had the big assumption that it was about trust. And so I took my skills as a Facebook marketer, the agency I had run, we'd spent over $100 million in Facebook ads. So I really know that platform and took the key selling points or key differentiators that Chris would bring, which would be former Navy JAG will help you, which in this case are a lot of older veterans, for a lower cost. So we did two things, vets for vets with the former Navy JAG angle and a lower cost option. And it worked. And having run a lot of Facebook ads, when you put some creative up and it runs and it hits, when a click-through rate's really high, you have something right away. So people were clicking, they were filling out our landing page form. And then Chris and I did intake calls and talking to these older veterans that were like our parents' age. It was clear that straight away, if you just said a personal story and built that personal connection right away, your conversion rate went through the roof. So when Chris got on the phone and said, I'm a former Navy JAG, boom, they started talking about their role in the military. And I was learning like terms that I hadn't been exposed to, not being in the military. But I also had a lot of family members. I had uncles, father-in-law that served as well. So I told my story. And so this personal connection helped all of our advertising perform better. And so our costs went way down. Our lead conversion rate was down. That fed into the Facebook algorithm so that we got cheaper delivery and we got cheaper, yet really high quality leads. And then the leads that we talked to, we converted at 20% into a retained client that actually filed a claim. So I'll pause there, and Chris, you can talk a little bit about the early days and what we learned.
Yeah, and Steph, this is something you brought up, I think, before the call too, of how do we vet the cases and how do we vet the leads? Part of it is just the fact that by and large, everybody on our staff has some experience with the military. There's sort of a language, there's a cadence, there's terminology that we're all familiar with. And so one of the things early on was that Nick and I experienced was it became very easy to sift through who was a fraudulent lead and who wasn't. And it's just and again, like the whole rapport building and trust building is also a vetting mechanism, because they'll say things like a fraudulent lead just won't know the answer to some of the questions that we're asking. Whereas, any veteran that served in the Marine Corps, served in the Navy, it would be second nature to them to know it. Similarly, the case managers that we hired, they weren't all Navy Marine Corps veterans. Two of them were in the Army, but it was the same sort of rapport, instant rapport. So that the shared experience of military service, even if it's just for a single enlistment, is enough to trigger that trust. And the clients that we signed up, universally told us that they were hesitant to sign up with any law firm until they discovered that there was a firm of veterans, that is dedicated to working with them and helping them file their claim. And I had a follow-up call with one even before, like just 2 hours ago, said the same thing, that he had been receiving 1 to 2 calls a day from law firms trying to sign up Camp Lejeune clients, and he just wouldn't take the call until he stumbled across the Nick's Facebook ads in that campaign. So that was that's how we were able to get, we don't have the biggest Camp Lejeune docket by any stretch of the imagination, but we're very proud of it because we did it in a very short amount of time. I mean, we were very late to the Camp Lejeune tort, and we didn't have nearly the runtime that these larger, better resource firms were, but that trust and the lean operation that we were able to run really helped us get across the finish line with a really strong docket.
Awesome.
Yeah, one thing it might be worth saying is just the numbers on that. I mean, we went from 0 clients to 297 filed claims with a docket. The settlement awards, they're all potential amounts, but we value them and had other people look at it, valued at $45 million in settlements. To go from 0 to 45 million in 10 months we're pretty proud of that.
So, I mean, this was your first, this was the first, case. This is the first win for you guys. And it sounds like it was, like basically a home run. You were able to acquire leads for 8 times less than larger firms. You're able to insert yourself into the situation at a late stage and do very well. That's terrific. And so now it's like, okay, so now what's next, right? So you guys now are looking to raise $1.5 million into a litigation fund. And there's no specific case in mind, if I'm not mistaken, right? This is more like, look, you're saying there's a bunch of toxic exposure cases out there. There's all sorts of disability. What is it? 1.7 million claims filed each year. And so now you guys are kind of leverage your expertise, leverage the trust that you've built with the military community, and expand into future cases. Tell us a little bit about how you're thinking about this next fund and what's next.
Yeah, Chris, I'll start with kind of like the community aspect, and then you can talk about the VA claims and AFFF as one of the torts and other potential torts. So when I was looking at the legal space from a sales and marketing perspective, a lot of law firms, whether personal injury, divorce, mass tort, kind of need to operate like marketing engines because it's all about getting cases and deal flow. You got to deliver on the work that you do. What I found was most of them aren't differentiated and do not really have a community element to it. And you can see that if you drive down any interstate in the US and you see billboard after billboard that's a lawyer face up there that says injured, call us. So we see an opportunity to build community around veterans, their families, and first responders. And inside of building that community, we're able to build up the trust, but then be the trusted source that they go to when they have a legal need. And we're already seeing a lot of positive data on that front of it's coming. So much so that as we were getting our clients started asking us for help. And the things that they asked for us, the most part, were VA disability claim appeals, AFFF mass tort claims, estate planning, military discharge upgrades, security clearance, and a bunch more. The things that we see as an evergreen business that we just do over and over and over is the VA disability claim. And then we layer in the hits business that there's a lot of revenue in, is each of these different toxic exposure mass torts, like the AFFF firefighting foam. So I'll pause there and have Chris talk about those 2 different ones of AFFF and VA claims.
Yeah, so and I'll kind of flip it and go in reverse. I'll do, so the mass torts, the hits business, that is the one, that was the one we thought was the natural progression after Camp Lejeune, because the process is fairly similar and we would be able to replicate it. By virtue of their military service, the majority of veterans are at some stage exposed to some form of toxic chemical. Some of it is unavoidable. The military uses a lot of, at least the United States military uses a lot of nuclear power and is in possession of nuclear weapons, and radiological exposure is a fact of life. Some of it is accidental and unknown, and that was sort of what Camp Lejeune was. They didn't realize that they were dumping chemicals like PFAS and PFOS, these forever chemicals, into the water table, and people were drinking it for 30 years. There was recently in the news a major PFAS spill at a former Navy base in the state of Maine, a base that had been closed down. There are forever chemicals in missile silos where Air Force service members were, standing watch and manning those silos year in and year out. It's something that the public has now become aware of, and there is momentum, not just with Camp Lejeune, but to increase the level of benefits, but then also to hold some of these manufacturers accountable for, cutting corners and making equipment. These defense contractors that were making equipment for the military, that were building some of these facilities or some of these systems, and putting these chemicals in there when they knew that there was a risk, but it was just cheaper. So as we were exploring what was next, and the next immediate tort that was active that we could get into is something called AFFF. It stands for aqueous film forming foam, and it's a firefighting agent. It's supposed to suppress the fire. It is very effective at putting large-scale fires out, but it has forever chemicals just laden throughout it. And whenever there was a fire on a base, or wherever there was training, and this is not just limited to the military, but a lot of fire departments, a lot of fire academies have this issue too. It went into the sewer and it went into the water treatment plants, and those chemicals didn't get filtered out, and then it got into the drinking water. And firefighters, service members, they would get doused in this when they were getting trained, and then if they went to the water fountain to get a drink of water, they were soaking it up again. So there were a number of our Camp Lejeune clients that also had AFFF exposure, so we knew we had sort of a built-in core for that next docket. As we were developing that idea, we were realizing, well, there's an opportunity for these veterans to double dip, because separate from the product liability, like say 3M, they built faulty earplugs, and a lot of veterans, especially those that deployed overseas, lost their hearing. They also made some firefighting foam, and some of the other these major contractors were involved in that as well. There are causes of action for these veterans to file against these companies, but at the same time, the VA has recognized toxic exposure, and not just for the firefighting foam, for burn pits near overseas bases, for air, contaminated air, for radiological exposure, all of that. So where there is a product liability case, there's also a VA disability claim, and the very same condition that gives them a reason to sue the manufacturer gives them a reason to get disability compensation from the federal government. So here you have one client, two cases, both defendants, in one case a major defense contractor, in the other case the United States government. Both defendants have very deep pockets and the ability to pay. And factually, this is all documented in their military medical records. So we have a very righteous case that we can that we can take in 2 different forums for these veterans and help make their life a little bit easier, because they're going to be suffering from these effects the rest for as long as they live. And I'll pause there in case there's any questions, because then there's we can go more into detail about the VA disability claims, but that's sort of where we have positioned Homefront now, is to pursue recurring revenue through veteran disability claims while layering in the hits business for toxic exposure.
So that's, I think, a good segue to talking about kind of the mix of cases that you're looking to take. You've got the mass torts on one side, and you've got the VA disability appeals on the other side. The mass torts, as I understand, are much larger. These are longer cases that can last 5-7 years in some cases. But I think potentially, correct me if I'm wrong, that the payouts on those can be very, very high, much higher. And then you've got kind of the short-term VA disability appeals, which I believe the success rate is pretty good with, and they tend to be about 18 months or so, and there's more of them, even though the total payout isn't as high, the success rate is good. So let's talk about that next. Let's talk about kind of the success rates with each, the time frame of each, the payouts of each, and how you think about approaching deploying $1.5 million worth of capital.
Yeah, no, great question. I think it's just a combination of building sort of a portfolio of cases where we have longer hold time but higher yield with mass torts, but at the same time we have I think of veteran disability appeals as sort of a very good business on volume, a much bigger TAM. The success rate is very high for veterans who do employ a lawyer to do their appeal for them, and part of it is because at that initial claim stage you have you don't have a lot of rigorous oversight on the VA side of processing that claim. So there is an inordinate amount of administrative mistakes that justify an appeal. Lay people doing the appeal themselves are not really, they just don't have the experience to catch that, but I do. That's my expertise. And that's so that could be, 18 months is sort of a conservative estimate for how long that takes. Sometimes those appeals are issue favorable decisions within 6. And so it's a shorter hold time, it's a faster cash conversion rate, for lack of a better term, and a fairly high success rate for claims that come in. And again, like the same process that we used with vetting Camp Lejeune, right? We're going to be able to do that, not just for the mass torts, but also for the VA claims. There's just certain documents that they'll just have to get just to get into the door that they should already have. And one of the other benefits of the VA disability appeals is that it's almost like litigation by checklist. There's the universe of law and regulation that covers it is a lot smaller than, say, AFFF, where the entire breadth and scope of the federal rules of evidence and the federal rules of civil procedure and all the case law that goes with that and all the other Supreme Court decisions and Court of Appeals decisions and everything on down comes into play. So that's where we think having a good mix and dialing that in to find the optimal mix of cases that are going to, having lots of cases that are going to settle favorably quickly, while having sufficient number of mass tort cases that are going to have a big payout within 2, 3, 4, 5 years. Now, hopefully, AFFF, we believe, is for far enough along where that settlement matrix is going to come out in the next 2 to 3 years, and we're going to start seeing settlements, as opposed to something that's relatively new that would take potentially up to 7 more years to do. So I think from an investment thesis, all of that plays into the fact, but also when we're looking at some of these more toxic exposure torts, we are going to be looking for the more mature torts, just so that hold time is shorter. And Nick,
let me just throw a little context in on that is we have flexibility by having a hit like a hits business that has a potential for a higher legal fees per case. Like the legal fees per case in a Camp Lejeune is, you know, on average $30,000. There are going to be some cases that are much higher than that, where like a triple F might be 20 to somewhere 20, $40,000 in legal fees per case on average. VA claim is probably somewhere between 6 and 8,000, and so you've got this, you know, 5 to 8x difference on those. But then the whole time, like the length to getting the settlement and money back is 6 to 18 months versus 2 to 4 years. And so when we're looking at that, we have flexibility in our model to ramp up and down on both of those to manage our cash flow and the expected investor returns. On the surface, it's a 50-50% blend. We're going to go 50% mass tort, 50% VA claims. But as like money starts to flow through and the tort develops, it could shift 75-25 one way or the other.
I guess the one question I have with regards to time is that, you know, with this fund, we're targeting about 2 to 3 years. Is that correct?
Yes.
Yes.
Okay. So if that's the case, I mean, is it wrong to assume that really it's the VA disability claims, which appear to be almost formulaic in a way, very checklist, I think you mentioned, that's really what provides the short-term cash. But these longer term cases, I mean, I just, it's tough to kind of understand if, you know, if they're going to last 5+ years, how you kind of, you know, factor that into a 2 to 3 year hold, really just from an actuarial standpoint, especially because this stuff is so, you know, it can go either way. But also just from an investor standpoint, like how are you kind of able to give the returns in 2 to 3 years if these cases, these large cases, are half of the total pie and they take 5 to 7?
So there are two ways to do that, Chris, and I'll let you jump in. Is on the mass tort side, we are relationships. We have relationships with the firms that are going to do the litigation of those cases, and we will have a blend of cases that they will just buy from us up front. So there's cash coming up front versus us waiting for a larger payment per case in the future. There is a case to be made to like do 100%, just buy our retained cases up front, and there's cash flow right away. And there's a case for let's hold for 2 years because we think that the AFFF is going to be settled and pay out in 2 years. And so there's flexibility in the model because these mass torts evolve over time of like when a payout's going to happen, the judgment likelihood, and so forth. So Chris, with that, you jump in.
Yeah, so to use AFFF as an example, right? That is what we would consider a mature tort, because that is going to start what are called bellwether trials. So when you have a tort like AFFF, you've got about like 20,000 cases that are filed in one district court. Of those, maybe 20 to 30 are actually going to see the inside of a courtroom, and they're going to be litigated, and how they resolve is going to drive settlements for the remainder of the 20,000. There's two ways we can, there's two revenue models for that, and we have the flexibility to do a hybrid of that as well. If we sign up 1,000, 1,500 AFFF clients, the law firms, the leading law firms in that tort will just straight up buy that docket.
That's how it works. They just say, look, we've been working with you long enough. Yep. We're going to buy this from you.
Yep. And it's a net present value calculation. What are the attorney's fees to that firm? What's that worth today? You know, haggle on the margins, and that's what we get. that's how we can turn that's how we can turn a mass tort docket around in a year.
Got it.
Yeah.
Okay. And there's an active market. I guess maybe that was the missing context here. I didn't realize, like, if you're not in this world, you may not realize, but there's an active market for buying and selling mass tort cases. The sellers are in many cases firms like yours, and the buyers are, I'm guessing, just major litigation firms, lawyers. Tell us a little bit more
Private
about
equity. Big private equity. We actually have I can't disclose who it is, but somebody that is exploring buying our Camp Lejeune docket. And they're like the biggest Camp Lejeune docket holders right now as far as an investor. So it could be a tangent, but in the whole world of litigation finance, there's this big gap at the lower end of the market. And the way that we're playing things, we can fill that gap and then be this feeder system into the big money. And selling dockets into the big money is one way to shorten the hold time. And I personally, when I was looking at litigation finance, I was attracted to it because it has a high IRR and a shorter hold time than like venture capital, which I've invested in. But there's still this wiggle room of some cases can go really long, and I have an eye towards how do we keep that hold time shorter.
It's almost like a feeder fund system, but for the legal world, right? And
exactly.
I mean, the VC comparison is always interesting. That's where my mind always goes with litigation, but the litigation finance. But the more I learn about lit finance, the more I realize that there's a lot of differences, a lot of nuances that VC doesn't have the luxury. I mean, with VC, it's basically you have to hit home runs for the whole thing to work. Whereas like the home runs in your case help, but that's actually only a part of the how you make money and how you can offer a target of 20% returns. That's fantastic. It's an interesting world. I would love to keep going off some of these tangents, but I think we have a pretty good sense of the structure here. I want to get to a few questions we have. So we've got two from folks that have emailed in. One is, they're kind of opposite questions. It's interesting. So the first is asking, what happens if you can't find any good cases? What's the risk of kind of sitting on capital because you don't have any way to sell the cases? You don't have any good cases. And I think you may have touched upon this earlier, but maybe talk through the risk there. Like, what's the risk that you can't find good cases to get leads for?
Yeah. So on the VA side, there's it's very easy to filter those out, and just the sample size of veterans coming out of the military, all of whom have some kind of condition that is claimable. It's very easy to spot a righteous case, something that has the facts back up the claim. We know the process. That one, because it is sort of like almost like litigation by checklist. There's it's the same thing over and over again. We even have data down to the different jobs within the military, depending on what service you're in. It's called an MOS or a designator. But knowing like, oh, this guy at this MOS, he's got at least these 3 conditions. We know that, right? So that there's tons of historical data. And the other thing that makes the VA cases very low risk is just the way that the laws are written. It's one of the few arenas where the laws and the regulations are drafted to favor the veteran. And at least 2 people I served with on active duty are now veteran law judges, and they have told me, in their experience, just in friendly conversation, their mandate is to give the veteran more benefits. Like, as long as they have a hook they can hang their hat on, their mandate is to decide in favor of the veteran. So with that respect,
has that changed over time? Has that always been the case, or is that more of a recent development?
It has certainly gotten better for veterans recently. And, you know, there's been a lot of expansion of benefits, but you know, this was a little bit before my time, but the VA's track record was horrendous, you know, a couple decades ago. And there's been a lot of pressure to make it better. So now is a great environment for veterans, especially, you know, older ones that have been out for a while, to submit these claims and get these benefits, because the deck is one of the few times in their lives they're going to find that the system is stacked in their favor.
Yeah.
Mass tort is a little riskier, but right, like higher return probably means that there's more risk.
Yep.
Ways that we can mitigate that are, you know, we touched on this already, looking for the more mature mass torts. If there was someone that came out today and said, I'm going to sue the company that built these missile silos in Montana for toxic exposure, that we don't even know if that's going to get approved by the court system as what's called a multi-district litigation. That's the fancy term for mass tort. We don't even know if that's going to be a mass tort. And we probably would not deploy capital in that right then and there. But we would monitor it, and we would kind of look to it, and that might be something, you know, that a follow-on fund might focus on, depending on how that matures. Cases where there's, so in the mass tort life cycle, there's a petition to a committee of judges, and they decide if it's going to be an MDL, multi-district litigation. Once that happens, everybody scrambles to sign up clients. The 2 or 3 law firms that have the most clients get appointed to what's called a plaintiff steering committee or the leadership committee. Some of those firms that are regularly on leadership committees are firms we've built relationships with. And when they get on leadership, that's when we know, okay, this is a safe bet to deploy capital, because this thing is headed toward a settlement.
Mm-hmm.
Like, at a certain point, you get a critical mass of clients, a company like 3M is gonna settle.
It's just not worth it. It's just how it goes.
It's just how it goes. And they have ways to benefit from this too. Like you know, the 3M fund for the earplugs, they're amortizing that over, I think, you know, 5 to 10 years. And they're going to, you know, they've set up a fund, and it's not really going to impact their bottom line. Like they've got really smart people figuring out how they don't go bankrupt.
Yep.
So, but you know, our focus is finding those mass torts, and AFFF being one of them, where the risk has been mitigated. We have a relationship with someone on leadership, and we know that it's a safe bet that our clients are going to get something, that they are going to get compensated.
Good. Very good. And so the next question was kind of actually the opposite of that. It was a very bullish based question. This is a question, is there any way that you can actually structure to shorten the hold period, maybe to 12 months, 24 months instead of 24, 36 months? And given what we know about your fund structure, it does seem possible, but tell us about your thoughts on that.
Yeah, so that is, you know, it's definitely on the table. How good we are at turning the VA disability appeals around, and how quickly we can do that will determine whether we can do a shorter hold time. Or alternatively, can we build a mass tort docket quickly and flip it?
Yeah.
If either of those circumstances or a combination of the two happen, you know, certainly we can shorten, like, yeah, it's in, I think, a lot of people's best interest to shorten the whole time and pay the returns.
Yeah. Exciting stuff. Guys, this has been super helpful to understand this world, you know, especially for people like me whose, you know, experience in this world is pretty much limited to Hollywood films. Aaron Brockovich, Dark Waters was good. But no, it's inspiring. You know, I mean, you've shown that you can improve the lives of veterans and their families and make the world a better place. And your model looks solid. And if you can potentially continue to earn very good returns for investors, even better. So that's it. If you're interested in the deal. Oh, sure. Please go ahead.
Yeah, just one thing on that, from like having family members that were, you know, that are veterans, and what you just said, is real. There's, you know, I think there might be some, you know, lip service every now and then when a startup says, let's, you know, make the world better, doing our part to, you know, improve lives and everything. Grubhub, we're helping people be lazy and eat, but it was a mission that we have. This one, if you invest in it, there's a real social good that is happening. And I can tell you that by being the person that was doing calls with a person that was very down on their luck and struggling to make ends meet, really struggling with their health. And to be able to bring one, just having them talk vets to vets, having them feel that connection again, lifted their days. But then to have them have somebody like Chris and our team back them to try to have them made whole for their suffering. There's definitely, you can feel good about getting a good IRR on this opportunity.
That's the best of both worlds. And it's funny because, you know, when you first mention litigation finance to someone who doesn't know this world at all, right? Someone who's starting at home base, there's an odd connotation around it that is completely undeserved. And the more you learn about it, the more you realize this absolutely is a good thing for the world. And you guys are proof of that. And you can get potentially very good returns for investors as well, which is obviously what we love the most. So, but yeah, this is fantastic, guys. Thank you so much. If you're interested in the deal, be sure to express interest. It's a $25,000 minimum, accredited investors only, anywhere in the world, as long as you're accredited in your jurisdiction. I'll have links to all the resources and send the recording out afterwards, and keep the questions coming. Nick and Chris, thank you very much for your time.
Thanks, Stephen.
Thank you, guys.
Thank you.